Good morning, good afternoon, good evening, everyone, and I'm delighted to welcome you to our second quarterly funding focus event of 2021. And there's something new about this one because normally we've run our events at 4 o'clock in the afternoon, but we've had feedback from some of our fans and followers in Southeast Asia and Australia saying that that's kind of difficult because 4 o'clock in the afternoon in the UK varies anywhere from about midnight until about 4 o'clock in the morning, depending where they are. And so we've decided to run this event in the morning UK time so that our friends and followers in Southeast Asia, Australia, and New Zealand can actually participate without it having them to wake up in the middle of the night. So welcome everybody in Southeast Asia, Australia, New Zealand. It's wonderful to have you here. We're going to slightly rejig our agenda this morning because our first speaker has another commitment in half an hour. So normally I would do an introduction and then we'll introduce the speaker and carry on. But I'm going to hand over now to Thibaut, and he will introduce our first speaker, Olga. And then after that, I'll do my introductory remarks, and then we'll move into a breakout session. So Thibaut, over to you.
I believe it's Taryn who's
actually me.
Oh, excuse me, Taryn. My apologies.
That's okay. That's okay. Morning, everyone. So I'd just like to welcome our first speaker this morning. She's a global innovation expert specializing in women and finance, sustainability, and gender smart investing. Please welcome the award-winning innovative fintech edtech entrepreneur and co-founder of our own startup, Olga Miller.
Yay, what an introduction. Oh my God, and it's early morning here in Zurich. Hey, welcome and hello, everybody. I'm delighted to be here. So what is it that I can tell you? I think, David, you probably had a lot of questions for me, but maybe I'm just going to quickly start to give you an overview of what is it that I really do. Yes, so please. I am the co-founder of Smart Purse, which is a financial health platform that connects women and financial services. And we do that through three means. We provide a lot of inspiration for women to figure out that money is really important and to find really engaging ways to sort of start to deal with money. We provide a whole array of financial education methods, starting from an app to a digital money school to courses, events, whatever have you, on a broad variety of subjects. From how to negotiate your pay down to how to invest sustainably in cryptocurrencies. And ultimately, we facilitate a thoughtful connection, a connection between the women that have learned about money and financial services. That can be financial services professionals, so experts specializing in financial planning, in divorce, in financial coaching and financial health, as well as potentially providers that provide the digital solutions of finance, so such as the new fintechs or sustainable investing solutions. We are, and that brings me, I think, almost to the focus of this session, a female-founded venture that acts in financial services and has a female market value proposition. Now, on that premise, imagine what it meant to go fundraising starting 2 weeks down into lockdown, which is what I did last year. It was an incredibly interesting experience because I think at the starting point, nobody said that this would even be remotely possible. Because of all of the biases that are in the fundraising system, because of the lack of awareness why such a solution would be needed. And we basically were kind of declared dead before we even started. And yet we still got there and still exist. David, your questions.
Yeah, wonderful. Thank you so much, Olga. Now, you have a background in financial services and have worked as an investment banker before. So you kind of know what it's like to sit on both sides of the table when it comes to fundraising discussions. I'd love to get your perspective as a female investment banker, how you found that side of the transaction, and then how you were able to apply that knowledge to as a female founder seeking funding.
So my unbiased view is that gender doesn't necessarily matter when it comes to looking at your investor, okay? When you want to be successful in funding, in fundraising, number one is to define who are the investors you are looking for, because different investors will have different ways how they assess your startup. So if you are looking at raising from a venture capitalist, it will be different multiples and a different process than if you are going down the angel investment route, or if you are seeking capital from the different private individuals that might be there. I have personally, but that's a very personal observation, not observed many gender differences when you pitch your startup EC to VC founders or to angel founders. They will be looking at who has funded your startup? Is the business idea valuable? Do you have a scalable business model? And do I believe, or as an investor, that you will get it off the ground? These are also the factors that I would look for as an investor and as a person. Are they different if I was a man or if I had a completely different affinity to what I was? I think not. It's just common business practice.
Okay, very interesting. And I accept what you're saying. I think, unfortunately, the statistics that are published would show that you're one of the outliers as opposed to part of the mainstream, just on the basis of all of the reports I've seen published in the US, the UK, around Europe, Australia, that show there is still a very distinct focus that female founders are not raising the share of capital based on the number of pitches they're submitting and all of that.
You know, absolutely. And I think we just have to be aware that these biases exist, right? I think the investor will not assess you based on the fact whether you are a man or a woman, most likely consciously. But what they will do is to have all of these unconscious biases that we all are aware of, where language plays a role, where, you know, the same pitch delivered by a man and a woman actually got, you know, full funding and even more capital if it was delivered by a man. And if it was delivered by the woman, only a fraction of the capital. There is a very impressive Harvard study on that, right? And it's exactly the same pitch. I think we have to be aware that all of these biases exist and are out there in the system. But if I put myself into the shoes of being a woman and a female investor, I think I personally, in first and utmost, wouldn't be looking for gender. I would be looking for the solution. What has happened with us in SmartPurse is what we observe. Naturally, we've been pitching our solution to rooms full of male investors, of course, because they are not that women out there, is that it wasn't that much about us being a woman that potentially led to a negative response, but it was the nature of our solution. So multiple times did we hear and say, well, we think there is not a big enough market out there for what you are doing, which is kind of surprising given the fact that it is a 700 billion opportunity for financial services to serve female clients well. But this type of stuff we did experience.
51% of the global population.
Yeah. And this type of stuff we did experience. We also did experience, of course, in kind of pitching contests. You know, the jury has 9 members, 3 are women, 6 are men. And then the feedback was, well, you didn't make it into the accelerator because the man didn't see the need for a women-focused solution. But that had nothing to do with me as a person. I never took that personally. I took it more in a sportive aspect and say, well, then, you know, certain people don't believe in the market potential of what I'm doing here. And that's fair enough, right? And I think this is where you kind of need to have the differentiation, or at least I chose for myself to have the differentiation to say, look, this type of feedback, I get it. Everybody is free to make his or her own opinion, right? And if there are investors out there that believe that the market potential for what we are doing is not big enough, or the revenue potential is not sound enough, that's fair feedback. Yep. Probably the same would happen if I was to pitch, I don't know, some stellar solution in biotechnology, right? And my market sizing wasn't right.
Yep.
So I think the message from that is to kind of differentiate what is the feedback you're getting on your solution versus what is the feedback that you're getting on yourself as a founder, right? And not get hooked up about this saying, oh God, I'm a woman or I'm a minority founder and therefore I don't stand a chance. You do stand a chance if your solution is great. It just takes a lot more persistence, right? That was the other thing I have observed, that, you know, a very dear friend of mine that I had sounded out before entering this fundraising cycle, she said, Olga, stop crying, okay? Getting no's is a completely good part of the process. Just put together your list and go pitching and pitch as long as you are successful. And I think minority founders just have to be prepared that we need to demonstrate a lot more persistence and probably also a lot more excellence on how we present our solutions.
Yeah, I think that's really good advice. It's a reflection that there are biases out in the marketplace, and you know, one of our long-term aims at Funding Focus is to address those biases and level the playing field. But equally, we know that that's going to take a long time, and so having that awareness going into the pitching environment is really helpful to say, yes, it's an uneven playing field and I have to deal with that. Therefore, I have to be more prepared. I have to be more on top of my numbers. I have to be more on top of my market, and I have to be confident in my product. But I think that's absolutely right. And you know, for the benefit of our audience, to be aware of that and to take out and say, it's not about me, it's about the investor not getting the pitch. So where is it not been delivered, or where is it not been? Yeah, no, I that's a really refreshing outlook to take. So thank you very much for that. So with that in mind, what would be, based on the experience that you had, and you've successfully raised angel funding from, I think, 4 investors, right?
Yeah, we have 6 investors right now. Yeah, we had a very first round coming from 4 investors, and all of them, or the majority of them, was men, actually, that believed in the cause and in the societal difference. And also there, very clear seeing the market potential. Okay, so they basically looked at it in the same way like I was describing. I would look at any investment to say, okay, we see 2 women with 2 completely different competencies. One knows women and how to build large-scale communities and can dash out beautiful, non-patronizing language. That would be Jude, not me, okay? And there is the other woman that knows financial services in and out and has developed a whole successful women market go-to strategy for a bank already. We believe the market is big enough, and we believe in these 2 women. And that's what made them sign up. And then last year, that has given us some very, very small seed money to kind of sharpen the concept and go out. And then last year, basically, we went out on a round where we said, okay, we would love to raise enough money in order to kind of get us to the next stage, to professionalize the solution, to prove the product market fit to the extent we are able to prove it, and kind of professionalize our tech. And initially, our round was planned to be £1 million British pounds. And then lockdown came, everything shut down. We went out with all the hindrances, would have found the capital, more capital than we needed. And because of lockdown, did the recalculations and said, you know what, we're going to take in less capital than we could have, work through the year and then go on another round so that we can ramp up the valuation of the company.
Yeah.
And so that capital, by the way, you will be interested in, the majority of it has come from one stellar angel investor who happens to be a woman who absolutely understands what we are about, shares the vision, and she's like, oh my God, I really want to partner on this. We've been very lucky. And the rest has come from the existing investors. So I think that's kind of our story. Now you will ask, okay, so how did we find that magic investor and that magic lady? It was actually through the personal connections. It was, I also reached out, and Jude reached out to people that we had known before that would know our work. And that maybe brings me to my second tip for this talk. As we all know, there are biases and they might be people that won't get you. Of course, going after the low-hanging fruits with people you know, keeping connections active, finding and seeking out actively investors that make it their mantra to support diversity in the funding process, is a lot more enjoyable than going and submitting your pitch deck to a standard massive accelerator, knowing that you potentially might not get the right answer. Yeah. So we followed a two-route path, distinct research on where are the funds, the VCs, the angels that make diversity in finance their calls, because of course that is the closest to our vision and what we are trying to achieve. And at the same time, last year, what I did was very consciously expose myself to some of the larger accelerators and different funds, not expecting that I would get money, but I wanted to get the feedback.
Right.
Why? Because the feedback helps you to make your pitch and your solution better. For me, it was a development exercise. And I very much appreciate everybody's feedback. If somebody gives you feedback, it means people care. They want you to be better. And for me, as tiring as it is to deal with all of that response, if you have the strength to embrace it, you will emerge with a far more sharpened and better venture. So I do not regret having done that. And I'm going to do the same now on our next funding round. Fantastic. And then the one thing I just wanted to add, and then I'm going to shut up, David, and let you ask the question, is that there is also a positive side of the coin, where being a woman or being a minority founder, whatever makes you being the minority, can turn into an absolutely unfair advantage at these times, because people do realize that, you know, there needs to be more diversity in the system, and therefore actually being different can be an accelerator for you. So to give you one example, I'm going to be pitching in Switzerland at the Startup Battle semifinals, and hopefully we'll make it to the finals. I'm the only woman in the fintech track, right? Or at least to my knowledge, I'm the only woman. Yeah. And it will come down to the business case, but also is 9 startups in the semifinals. Can I be good enough? And can I make me being different and being a woman my advantage? If I can, oh hell, I'm going to do it. Why not? No shame here, right?
Yeah, no, absolutely brilliant, and the very best of luck with that. If I was able to travel, I'd come, but going to Switzerland right now means going into quarantine. So I will wish you all the best from the distance, and if it's being done virtually, I'll see if I can check in and watch your pitch. Thank you for all of that, Olga. A couple of points I just wanted to pick up on. I loved what you said about turning diversity into a strength, and what it reminds me of one of the speakers that we had at our last annual conference in November, a young Black gentleman called Sam Okasawa. And he did a talk which was all about what he called the advantages of being disadvantaged. And so much of that is about what goes on up here, because, you know, we might go out and think, oh, well, I'm a woman or I'm a minority or something, therefore it's harder. But actually, if you take the position that you've had, which I think is wonderful, and say, how can I turn that into a strength? How can I turn that into something that differentiates me from everybody else who might look the same? So I think that's a really, really valuable piece of advice for people going forward in their pitching. The other thing I'd ask you about was in the context of finding those investors, because that's a question that a lot of people are asking me, is, you know, how do you go out and find them? And you know, it's about networking, it's about doing your research, it's about searching, talking to people you know, asking for introductions. But I'm just curious on any other tips or advice that you would give to our audience on how to find the right kind of investor.
So I think it was all that you just mentioned, right? And it is just work, right? So searching through Crunchbase and searching through LinkedIn connections, searching through the different funds, right? Because not everybody is labeled as I'm a diversity, or in my case now, women-friendly, women-focused investor. So it just means doing the legwork. The one thing that I can add as a tip is I ask everybody who has given me a no, do you know of a person that might be interested?
Yes.
Kind of, I get that it might not be the right thing for you. Give me the one thing I should improve. And would you know of any people that might be interested? And would you mind making an introduction? And actually, that has borne some very interesting connections and some very interesting insights that I personally would have never thought about, right? So I always take a no also, I mean, it sounds stupid, pardon me, everybody listening, but almost like a positive no. It's like, let's not, so if it is a no, let's at least again get the maximum out of it, right? Which is good feedback that will make you better, potentially a recommendation, at least understanding why, some of these things. And I also ask, and on every no, is like, okay, understanding the why, shall we come back next year, right? Yeah. And in many cases, it actually was said, yes, come back next year because we felt your valuation is too high, or we really liked it, but we only invest once you have made so and so much revenue, or we would have needed to see this or that, which is kind of stuff you otherwise don't get out. Yeah. So that has helped.
That's absolutely true, and I would support 100% what you're saying there, and certainly in the work I do with clients on fundraising, it's the same story, and in so many cases, particularly in the venture capital world, you know, you might send your pitch deck out to 50 investors, and you might only get 10 response, and 40 of them just don't bother to respond. That's a separate issue. I think that's bad, but that's a separate issue. But from the 10 who do respond, even if all 10 of them say no, the fact that they've taken the time to read what you've submitted, look at it, think about it, talk to colleagues, and come back and say, you know, no thanks, it's not for us because of reason X, Y, Z, or you're too early, or our minimum check size is, you know, double what you're asking for, or your valuation isn't right. But yeah, and where you've taken it to the next level is, don't just stop at the, oh, that was a rejection, but actually take it back, thank them for their input, thank them for taking the time, and then, as you said, ask them, is there anyone else that you think we should talk to? And would you make that introduction? Because that's so powerful, because that enables you not only to expand your network, but also it enables you to get into other people who, those, you know, I mean, the investment community is so small, and most of them know each other. So they know who's doing what. And if Joe Bloggs introduces Fred Smith to Olga Miller, then all of a sudden Olga Miller's got a much better opportunity with Fred Smith than if she were to just approach him directly cold without any kind of contact. So no, that's a absolutely brilliant suggestion, and one that I'm sure our audience will take on. I'd like to open it up to the audience and see if anyone else has any questions. We're a small group this morning, but if anyone has a question, please feel free to either raise your digital hand or take yourself off mute and just say, I have a question, and we'll take it. So I see a few friendly faces in the audience. Any questions?
Hi, I have a question.
Wonderful. Thanks, Sanjana.
Yeah, so hi, Olga. I'm also based in Zurich. So I found that when pitching my solution, which is also female focused to investors, there's like a lack of interest. So whether it's a competition or, and I don't know, I'm also minority and a woman. So the thing is, I find that kind of difficult to overcome. So I know you mentioned it in your, you know, in what you said, but how should one go about it then?
Yeah, I think that is a general problem. I had the problem as well, right? Depending on where you are active. So if your solution, for instance, is in finance, like mine is, or in education, because my thing is a hybrid, you will get that angle and say, you know, I'm not interested in something around women. And I think then the only thing is to try to convince, or for certain investors, develop a different pitch, right? So for instance, if it is like a super, I don't know, technology affine investors, in our case, we pitched a different angle of the solution. It's like we developing a great content platform that helps people to understand money better. We have started with the women, and it's infinitively scalable also to other audiences. That was one way how we tried to overcome this. But I think, and of course, it helps if your solution is versatile in that respect, which we were lucky enough that it was, right? If you have multiple revenue streams, then it helps. You can multi-pitch. But what I also observe is that, you know, even 3 years ago, 4 years ago, there was very little awareness about the potential of the female market. That is slowly changing, but is only changing slowly. So having really good market sizing figures in terms of, you know, how big is your addressable market? How big is the potential market? How do you intend to get traction? I think is something that I have found investors almost go like, oh my God, I didn't look at it this way, but hey, yes, these stats. And it's kind of a revealing moment. So that has helped us. Okay. And the final thing I wanted to mention, and links to the point you were making before, David, is I think it's worth putting time into your pitch deck as a minority founder, really to have like these highlights that investors like to see springing out. It was one of my big learnings that basically the funding deck, the teaser deck almost really is a teaser and not necessarily has to give away everything about the solution. It's only there designed to get you that meeting. And I was failing on that at the beginning last year and still fail now because I'm kind of a detailed focused person. So I need to explain everything to everybody in all its glory and detail, which actually is not required. So if you have kind of a high level deck as a minority founder, I think you also need to have the courage to brag, right? And by bragging, I mean that finds the unique stuff that makes you think unique, including yourself, and don't shy away from showing it. Because on myself, I have experienced that I've always been very shy about this. Like, you know, we never went out and say they are two women, one has already changed the world and one changed a big bank and now we're building something new, generates a different appeal than we think that women need to learn more about money. I think you kind of see the difference.
Right,
and that for me, however, took a lot of personal strength because, oh boy, I'm so not wired that way.
Right. I know. Yeah, thanks. That's great advice. Thank you.
Thanks, Olga. I want to pick up on two things there from what you said. And let me just double check, because I know you've got a hard time commitment. How are you?
Can put in another 5. That's okay if there are more questions.
Okay, super. So two questions. Well, one's a comment and one's the question. So I'll start with the comment, which was just picking up on what you said about pitching. And I think that's something that so many people need to be aware of. The goal of a pitch is to get the meeting. The goal of the goal of your first pitch is to get a meeting or a call or a Zoom or a whatever. So you want to put in enough information that gives the recipient interest and thinks, hey, I want to know more about this, without necessarily overloading them with everything. And, you know, I've seen some pitch decks that are, you know, 30, 40 slides, and that's way too long for an early thing. But I think for anytime a founder is pitching, they need to go into that pitch experience thinking, what is the goal of this pitch? And whether it's to get an invitation to an in-person meeting or an invitation to a presentation or something like that, then just be aware of what it is that you're pitching for. So that was my comment. I've had a question through from someone in the audience just saying, on the topic of pitch decks, how important would you say is a good design to a pitch deck?
I think the design is important nowadays. I think it's like, I look at it like an extended business card. So the design is important. I think, and again, I am not a pitching expert, right? They are people that know this down to an art, how to pitch a startup, where you can get, I think, at very reasonable price or even for free, a lot of coaching on this. And I actually do encourage everybody to use the knowledge sources to get coaching on doing good pitching, because it has evolved into an art. And as it has evolved into an art, the standards of what investors see and expect to see has risen. And therefore it is time and potentially a little bit of money well invested. And for me, that also goes to the design. That said, don't despair, right? Can you get away with a well-done pitch deck done, for instance, with Canva that has tons of templates and tons of ideas? Of course you can. You don't need to have every minuscule thing designed. But I think that the look of the whole thing shows that you care, and it's not entirely to be neglected.
Yep. Thanks for that. And just picking up, so Sapna saying, as a brand consultant, she would say first impressions are everything. So that's good. Another question come through. As a minority founder in the finance sector, which is a highly regulated area, have you found adversity in getting regulation for SmartPurse?
We got the question a lot, and what we did was to anticipate that question. So SmartPurse is part of in the UK of the FCA. It's called FCA Startup Unit, where they basically advise you on how to interpret the rule book, which is a fabulous service by the FCA. Quite a long application process to get there, but then you get the FCA specialists that look at your solution, and depending on what you want, if you want to be regulated, they'll help you to achieve that, or at least get the process right. And if, like in our case, you want to know where the boundaries are so that you wouldn't step into regulation, because we are an impartial financial educator, not an investment provider, they provided stellar feedback on what it is that we need to do and where the boundaries are. But addressing regulation in financial services, very important, and it has helped a great deal to do that properly.
Yep, yep, excellent, wonderful, thank you. Any last questions from the audience? Either put it into the chat or just put yourself on mute, or unmute yourself and just ask.
I've got one, which is just for personal interest. So earlier you said one of the things you do is help people invest sustainably in cryptocurrency. I wondered if you had any quick tips on that.
Probably not as quick as I could share in the next 2 minutes, but I think that sustainability in crypto is like one of these undetected fields, and there are ways how you can choose your cryptocurrencies that do not necessarily rely on mining. Then obviously it might have an impact on what currency it is and your revenue that you might get from that. And also some very interesting developments that are happening to make the whole crypto world more sustainable. So almost kind of looking at crypto with a sustainability lens is something I take deep personal passion in, because it's from sustainable investing is where I have come from, and very happy to exchange on that separately if we want to. But it's a nascent field, and I find it very fascinating. Will you find the perfect solution? No, of course you won't, but probably some solutions that already might go in the right direction.
Fabulous. Olga, thank you very much for joining us this morning. And we wish you all the best with SmartPurse and with your next round, and we'll keep in touch, and I'll watch out for you at the startup battle in Bern.
Absolutely. Pleasure to be here. Thanks for having me. Have a wonderful day, everybody.
Thank you. Wonderful. That's great. Well, thanks everyone. So we're now because Olga has to be involved in another presentation, we're now going to come into what would have been my introductory remarks, which I'll keep fairly short, because we're going to do one of the pieces of feedback we've had from previous sessions is that everybody really enjoys the breakout sessions where they get to meet new people. And so we've actually built a couple of breakout sessions, a couple of longer breakout sessions into our schedule for today. So I just wanted to touch on a few things that have happened recently. There have been a number of reports published, primarily in the UK, although I've seen some coming out of the US, that are just showing the update on statistics and things that are happening in this marketplace. One of the most powerful ones was a report that was published on performance in the UK and fundraising in the UK by the gender of teams. And it came out from Bowhurst. It was the subject of a LinkedIn article that I wrote, so some of you may have seen that in my LinkedIn feed. But it was looking at the level of funding in Q1 of 2021, which absolutely shot up astronomically compared with Q1 of 2020, which obviously was partially impacted by the beginning of the pandemic. But the most interesting and powerful thing was that the graph went almost vertical for male-founded teams. The graph was sharply upwards for mixed gender teams, and that was driven primarily by two very large deals, one of £254 million by Starling Bank, which is one of the leading UK fintech banks, with a female founder. Well, it's a mixed gender team, but Anne Bowden is the female founder. I'm trying to find a way into her because I'd love to interview her or get her on one of our future events to tell her story. She's a phenomenal entrepreneur who's written a really good book about how she's shaken up the banking industry. And the other one was from a tech R&D business. I'm sorry, I've forgotten the name, but they raised 210 million. So there were these two large deals that kind of skewed the thing for mixed gender teams. But the graph of the female founders was flat along the bottom. So there's still really big issues here. And we're just not seeing the uptake in funding going forward with female founders. So we're going to keep on fighting the fight for fairer funding. And we're committed to this. We're actually increasing our time and resources on focusing on where we want to take funding focus. And you know, this event being held in the morning UK time, so that it's at a more acceptable time for people in Southeast Asia and Australia. And I see we have some people from Australia online, which is great. So welcome and wonderful to have you here. The other thing I want to touch on is based around the racial minorities. And again, it's information that's come out recently in the UK. There was a report called the Cornerstone Report. And again, that was picked up on in a recent LinkedIn article. If you want to read more, there was also, I was published in Diversity Q, which is an online magazine. So if you go to diversityq.com and just search for my name, you can pick up the report in there. But it was looking at the racial diversity of investments in the UK during 2020. And it's one of the very few reports that I've found that's actually looking at racial diversity. And again, we're seeing the same issues. So they were looking particularly at London and the rest of the UK and looking at population trends. And within London, I think it was 13% of the population of London was Black, and yet only 3% of the funding in London in this particular period went to Black founders. Even starker statistics for Asian founders. So there's a real challenge there. And I'm hoping to find research similar to this in other parts of the world. I have seen a few pieces in America that's looking at the ratio of investments into Black and Latinx in particular, but that's I haven't found anything that's come out recently that's addressing the situation this year. But within Funding Focus, we've just taken 2 people on in our team. They're actually on the call. Drew and Jacob have just joined us. So we're upping our resource to work on researching this and gathering in more information. I think as well, for those of you who were on our Q1 call, I may have mentioned this before, but I am in the middle of writing my second book, which is going to be all about this whole issue around Funding Focus. It's probably 2/3 written, and I've written the easy part. The harder part is coming. I've spoken with someone who I hope is going to write the foreword to the book, and she has challenged me to think a little bit bigger and more broadly in terms of social and political and economic change that needs to happen in order to drive this forward. So I'm working through that. I'm still hoping to have the book published this year. So please watch out for that as that comes out. But that's just kind of an introduction to where we are. And normally this would have happened before Olga, but because of Olga's commitment on time, we had to just rejig the timetable. We're into the second half of our program, and now I'd like to hand over to Thibaut Grummet to introduce our second speaker, Michael Lavalle. So over to you, T.
Hi, everyone. Lovely to see all your smiling faces today. So Michael, in 2019, founded sendit.money, a payment platform, but not any payment platform, one that tackles economic exclusion, allowing users to send money internationally. Their services are simple, secure, competitive, and dependable. Currently operating between England and Nigeria, their sights are set on many more very soon. To expand, Michael has raised funding, and he's here today to share some nuggets of wisdom with you all. So to the man rivaling PayPal, let's give him, Michael, a very warm welcome.
Thanks, Steve. It's great to be here. Yeah, that's rivaling PayPal. I found that very humbling. So thanks, Steve.
So, Michael, do you want to share with us your story?
Absolutely. It's a great pleasure to be here to be able to share story. I'm a strong believer that our life is all about stories, and knowing how we share those stories and connect with others through those stories it's what makes the magic happen. I faced the frustration myself starting out 14 years ago. My first company, I found myself working with the likes of World Banks and Rothschild Foundation in East and West Africa. And I used to always stand out in the room and have people, folks, experts from the Western world always kind of look down on us and like, what's this guy even talking about? They already have their preconceived notion of who we are. So I literally have to prove myself 10 times harder than the rest of the counterparts in the room. So now evolving over years and becoming an angel investor myself and developing a very good relationship connection within the industry, I came across one thing from my first company. Whether you're a Black founder or female entrepreneur, the key thing is we all need an infrastructure, an ecosystem that gives us an access with the people that sympathize with our stories and with the problem we're trying to solve. And I found that over and over in the VC world, because if I go to in the VC realm we have today, we're not going to shy away from that biases. They even in London, we have what I call the golden triangle, which is the London, Oxford, Cambridge, which is where the 65% of entire funding, even in the UK, is kind of concentrated on. So if you don't know any old 67 white male man in Oxford or Cambridge, you can put in a word for you. You probably don't stand a chance, but that's a changing, because now we're moving from a place of unaware to a place of awareness, and thanks to a program like Funding Focus. And I look forward to receiving your question, David, and breaking down views and challenging views, but also before I close my mouth, is to say it all comes down to three things I've learned in my journey. It's about your story. People invest and buy your story. It's about how credible you are as a founder. If you do not thrive on your unfair advantage and make your unfair advantage come as credible enough that someone would think, oh my God, I'm going to be an idiot if I don't back this guy or this woman, then no one is going to bet on you, because you're the first person that's going to bet on yourself. And the last one, it's all about people. Over to you, David. I look forward to your questions.
Brilliant. Thank you so much for that, Michael. And I agree completely. It is at the end of the day, and this was an article I read some time ago, but it was saying, what are the main things that an investor looks at in a pitch deck? And the number one thing that they look at is the team, closely followed by the financials, and then the problem and the solution. And it always surprises me in decks when people put the team at the very back, because if you think about it in the context of a story, the team and the people are the story. And so when I'm constructing decks, I always start with sort of a kind of an elevator pitch, just this is what it is. And then here's the team, here's the problem, here's the solution. A bit more gumph. I put the financials at the back because I don't want, I mean, they always know financials are at the back anyway, but I believe that the team is absolutely critical and needs to be at the front of the deck. The team is core to that. So if you could just share with us, Michael, then a little bit of what you've learned on your fundraising journey in terms of any challenges that you've faced and how you've overcome them.
I'm going to try and summarize that in about 5 minutes. There's a lot of challenges I've overcome. And I'm going to steal a lot of words from Olga, because she actually, I resonate with a lot of ideals and thoughts. It comes down, you've got to be persistent. It comes down to that, the persistency, how you wake up every day. Like I tell myself every morning, don't worry, no is part of the process. Actually, no is a good thing. It comes down to that mindset, because every day the VC model is designed to say no to virtually every pitch that comes to their table. Whether you're a Black founder or female entrepreneur, that doesn't really matter to them, but you really want to try and make sure you minimize this, the chances of them not saying no to you. And that comes down into how you you present yourself. Because at the end of the day, the VC, I'm a numbers guy. I love data. So if VCs raise 10 million for fund, the VC to break even has to invest probably $100,000 check in 100 company, and 10% of those companies has to become a unicorn for VC to return the fund 3 to 4 times, and for them to break even and cover their management costs. So if you understand that mindset of how the VC work in the first place, not every product is meant for a VC. Not every product is meant for an angel. There's a lot of alternative funding out there. And what I've picked out along that journey is to first do my own homework. This product I'm building, what's this product for? This product I'm building, are there funds, investors out there who actually face these challenges or face this problem? Because if people face that similar problem, they can connect to you on an emotional level. And when people connect to you on an emotional level, they have tendency to be invested in you. And I've seen that in our journey. And another thing there is ability for you to present yourself credible. Because to the VC, yes, the market is great, amazing. The team can deliver because they're a very credible team. Then in the mindset of that VC comes down to one thing. Can they actually execute on the roadmap? Can they actually deliver what they're promising in this pitch there? And to you want to tell the story, to tell me the VC says, you don't need to teach me about this. I know this, I validate this problem, because no one wants to buy what no one is going to pay for. Because let's face it, most of entrepreneurs, especially minority entrepreneurs, and I have opportunity to speak and mentor a lot every day, we have what I would call a fantasy ideas in terms of wanting to solve a problem for our community. But we need to understand here that the VCs are there to make money. They're now new funds want to make good in the world, but also wants to make money. So is your idea, do you have the solution you bring into the market? Is there potential for 1 million users to actually download that app, to actually use that solution, to actually pay you for that solution? If the answer is yes, then you have something that is bankable by the VC. So understanding yourself, understanding the problem, and please validate. You've got to validate the problem. Don't just think in your mind is a viable product and then start talking to people about it. You've got to validate it. You've got to join ecosystem. We joined Founders Institute, for example. We're very fortunate to be part of our Labor Project program at Oxford University. And I think that's when things begin to change for us and sending the money. And that still comes down to that credibility. What are those ecosystems out there that understands what you're solving, but people already trust these institutions or this ecosystem, and that becomes a springboard for you in your journey. And that's why people join the likes of Y Combinator or Techstarters. There's no magic bullet these accelerators are adding to their journey. But what they add to their journey is that credibility to say, for this startup to get into Techstarter or 500 startup, then I will be an idiot not to invest in this company. And it's that emotional alchemy, I call it, that goes on in that journey. And once you understand this as a founder in my own journey, I've literally understand what I call my own cheat book. And I literally, before I approach someone, I want to understand, does this person understand the problem? I don't want to go into pitch to an angel investor or VC and start teaching them about the problem. They're not going to invest in that. No one will invest in what they don't understand. Because while someone doesn't understand, and this happened, that's where a lot of Black founders and female entrepreneurs, we get no, because we're very passionate about our community. We've faced the problem, we're very frustrated, and we go to pitch to these VCs and angel investors, and we take that anger into that pitch. And people can feel that anger. I was in a pitch where then a Black founder was pitching, and he was saying, we were underfunded. No one listened to us. No one wants to hear that. Hang on a minute. What's the problem? What's the solution? How big is the market? Is this something that could potentially become a unicorn? Because everyone on that table who wants to invest in you, they want to do good in the world, we get that, but they're looking for any more of 10x of their initial investment. So do you have that probability to give them the 10x of the initial investment? If the answer is yes, then there's a conversation. Then, yep. And that's what's worked for me, David. Is I didn't go into a meeting and begin to think from a place of negativity, thinking, oh, the stock is against me. Oh, they're all gonna say no. No, Because once you see the bigger picture, it's about you building your own little tribe. Every VC I've had conversation with end up becoming friends. Every angel investor I've pitched to end up becoming friends. I don't pitch to any investor to get money. I pitch to them to develop a connection. And that connection is what opens doors as you further along in your journey.
Yeah, that's brilliant. So that was, I'm glad we're recording this, because there were some incredible nuggets of gold in there. I'm just going to pick up on three things that you said, Michael. You talked about being selective who you're pitching to, and I'll raise the three things and I'll come on to it. So you being selective of who you're pitching to, understanding what is it that drives the VCs and the fact that they need those unicorns. And the third one that I really loved was what you were saying about don't carry that anger into the pitch, because all it's going to do is create an environment of anger, and when you want to build an environment of relationships. So coming back first to the pitch one. So what I typically do when I'm working with clients is I'll draw up a long list of 200 or 300 investors. And then we'll sit down and systematically go through their websites and go through their LinkedIn profiles and go through all of their information. As Olga said before, it's hard work, it's time-consuming work, but it's really, really important, because at the end of the day, what you want to do is go out to, in my view, a short list of not more than 50, where you've already zeroed in and said, you know, they might say they want this or they want that or they want the other, but you can zero in and make sure that what your pitch is offering fits with what they're looking at investing in. And you need to think about this in the context of venture capitalists generally are investing other people's money. So they themselves have gone out and raised money from wealthy individuals, from pension funds, from university endowment funds, from insurance companies, from investment banks. And they've taken in that money, saying to those funders, who are often referred to as LPs or limited partners, we are going to invest this in companies that fit these criteria. And so it's really important for you to realize that if you're a biotech business, don't bother applying to a venture capital firm that only invests in fintech, because you're not going to get anywhere, because they don't invest in biotech. They only invest in fintech. So take the time. It's legwork up front, but it's worth taking the time, because if you're focused, you'll get a much better reaction. The alternative is, you know, if I throw enough mud at the wall, some of it's going to stick. Which is true. But as I was saying when we were talking with Olga, the investor community is fairly small, and they know each other. And if they're out having a drink and a chat saying, oh, I got this pitch from so-and-so, it was completely irrelevant, and the person there was, oh, I got that too, and what was it's like you get a bad reputation in the marketplace. So take your time and find the right people to pitch to. I've forgotten what the second was. The third was the second was not carrying your anger. And that's so true. When you are pitching, you need to be in the zone. You need to be in the zone of, I'm confident, I understand my business, I understand my numbers, I know what it's like, and this is me presenting for all I'm worth to convince you to get us to the next stage of whatever the presentation is. So if you go in there with a mindset that's filled with anger or anxiety or anything like that, you're going to be in a difficult situation. And bear in mind, these investors get pitched to all day long. They can very quickly read signs of people like being in not good places. So really, you want to focus on making sure your head is in a good place, making sure you're feeling confident, making sure that you know your stuff, and go forward from there. And then the third one, now I have lost it, was pitching.
That's correct. So the third one there is you going in there and presenting yourself to be credible. Yes. You don't want to go there and just start doing blah, blah, blah. And you really want to go there, show it to them, you know your stuff, and they will be an idiot not to actually invest in you.
Yeah, absolutely. Absolutely. Fantastic. Wonderful. Thank you. I'd like to open it up to the audience. Is there anyone who has any questions that they'd like to raise with Michael and his story? I can ask him a few other things, but I'd love to open it up. Pooja, do you have any questions? No? Okay, Ruth?
I had the pleasure of having a chat with him in the breakout room, so I'm good.
Ah, okay. Excellent.
Yeah, David, I'd like to just pick up on Michael's point about VCs. I think it's very important founders understand the basis of how VCs make their investments. And I think what Michael was saying, if they've got $100 million fund, they've got to return 4x to their LPs. And to do that, they've got to have exits of at least 4 billion at 10% to return that fund to them. So that means that they're always looking for the big bet, a big market, a big exit. So a lot of founders get confused. They think that there may be an opportunity for a small project to get taken seriously by the founder. And there's nothing wrong with the project. It's just that it's not scalable, or it won't reach the exit levels that VCs are interested in. So if they get rejected, it's not because the idea or the concept is wrong. It's just that it won't meet the milestones that the VCs look for in their exit plans. So I think it's important that founders understand the basis of how VCs make their investments, the way they evaluate investments before they make them.
Yeah, excellent. Thank you very much for that, Farouk. Ruth, did you have a question you wanted to ask?
I just wanted to pick up on, I don't know, the only thought that comes to me is people buy from people. And I'd love Michael to expand on that in his area of business. What does that mean to you? People buy from people.
I have a theory that the next business that will do well, it's not going to be business that have the best CTO or tech. Now is in here of tech-enabled solutions, but we're going into here where it's all about the community. Community-based solutions are those big companies that are going to make big bets as we go in, and we start seeing the early stage of the validation of that theory from the likes of Clubhouse, from the likes of Hopin in the UK, a platform that just brings people together to have conversation and create that sense of community. And to me, it's about understanding the power of that connection, of bringing what I'm calling the blockchain space network effect, is the ability for you to create that a kind of a close network effect where I'm speaking to all of you today. This is my first time meeting you, and I want to speak to as much as you after this conversation, because that's where the real magic happens. It is the people, it is the power of that, understanding that network effect concept, that for every VC you pitch to, don't go pitch to them because you want money. Actually, those who go to pitch for money never gets money. Go to pitch to that VC and ask them about their interest, ask them about their failures, ask them about, be human with them, ask them about their vulnerability, ask them about, try and pop their ego a little bit, because they makes the VC world a little bit too sexy, egocentric, and I'm just there to scare the shit out of the entrepreneurs. Go there as an entrepreneur and just pop those egos and just say, out of every fund you've invested, I was in a VC meeting one day, and I said, I've seen from companies you've invested in, there are a couple of them that I can see are not doing well. What is the lesson you've learned from there, investing forward to founders like myself that come into you? And the guy was like, oh, no one ever asked me that. And that whole conversation led to where he went for his last holiday and what is his favorite meal and how he's been to Kenya. And we talk about Africa. And it's totally left from being there to talk about invest in me to be, I'm a human, you're a human. I just want to get to know you as a human. And magic happened from there, because this individual making an introduction that ends up giving us a £50,000 from an angel investor. So, and I've seen that, and that's what I mean by understanding the power and the magic of bringing people together in your journey is very key as a minority entrepreneur, as a female entrepreneur, because once you go to people and be too formal with them, which I love the word professionals, which I don't live by, and you can see from the way I'm talking, is people wants to be people and they want to be treated the same. And the moment you can connect to people on a personal level, I have a word, people will forget everything you do for them, but one thing they won't forget is how you make them feel.
Yep.
Thank you.
Thank you, Rose.
Great answer.
Brilliant.
Thank you.
Yes. That was Maya Angelou who said that first.
That's correct, David.
Wonderful author. Great. Okay, we've got one more question that I've just come through on the chat. So the core team and the founding team are undeniably very important. What's your advice on presenting this in a pitch deck? Is it better to have lots of detail or less detail?
That's a very tricky question, but I'll try to do justice to that. From my experience, I'm a very simple person and I live by that mantra. Nothing is complicated. The VC life itself is complicated enough. So don't give them a deck that will make their life more complicated. Keep it simple. VC will want to do a basic due diligence, and basic due diligence for VC now, this is a LinkedIn profile. So if you do your deck and pull your team forward, have one single paragraph about why the VC believe, because don't forget it, when you send them your deck is just a representation of who you are. Your deck is presenting to them what the opportunities are. But in the minds of a VC, the question is, how are they going to deliver? Can they actually deliver what they promised in this deck? And your team is super powerful in how you present that. So one single paragraph of what they've done in their past, what their achievements are, and what it brings to their team. And then you really want to have that team slightly very coherent. Like instead of the money, the way we tell our story is Michael understands the problem. I understand the market. My co-founder, Julie, she's a female founder. She's worked with startups, 40 Series A startup here in London. She's an operational guru. And then we have Bowen, who is a UI UX designer, who has been the one designing this deck. And we have our CTO, who has had 18 years of experience building. So with that synergy, don't go to them, and you need to let them know you have the unfair advantage. And you want that to come across when you're presenting your decks. Your team is very powerful. Until you get to Series A, I will strongly advise, try to make your team come as credible as important, because any serious investor investing from pre-seed to Series A is taking a bet on the team. Forget about them asking you about tractions, about this. A serious VC or investor knows that. Now, until you get a Series A product market fit and achieve that viral coefficient, you're just trying to figure things out. And they know that, but they wouldn't tell you that. But what they're betting on is, can I work with this person? Is this person credible enough? Do they have deeper understanding of that market? And that's why if you're raising seed rounds or pre-seed round, your team is your asset and you want to do justice to them. But please don't give the whole CV background. Just give one single paragraph and a link to their LinkedIn page. If a VC wants to know more, they will find out about them.
Yeah, that's very true. And in a project I'm working on right now for a client, increasingly the VC firms are having Typeform or Google form thingies where there's a preset bunch of things that you have to submit as well as uploading your pitch deck. And in the vast majority of them, they're now saying, give me the LinkedIn profile of all the founders. Because that's one of the first places they're going to go and have a look. Who are these people? What is their LinkedIn saying? And therefore, that means for you as a founder, is really important to make sure that what you're positioning on your LinkedIn profile reflects what you want investors to see and understand. So if you've got experience working in a big corporate for a number of years and you understand how things operate at scale, make sure that that's reflected in your profile. If you're on your third startup and you've learned all of these things, make sure you set out what are the key things you've learned on this journey that you've been down. If you've got a particular background or a qualification, make sure that it's reflected in your LinkedIn profile, and not just down at the bottom, but in that section up at the top where you've got free form text to talk about yourself, because there's no question now that LinkedIn is where people go to find out about other professional people. So if nothing else, do spend a bit of time investing in building up and developing your own profile on LinkedIn, and start getting a bit more active, and because these guys will go in and they'll not just look at your profile, but they'll go in and they'll say, okay, what has this person been posting about? What opinions do they have? What are they investigating? And the further you get down the process into due diligence and things, the more depth they're going to go into, and they're going to, you know, they'll have teams of researchers in their companies. It might not be the main VC, but they are going to drill in and really understand who you are and what you are. And your social media platforms and profiles are really important in that respect. So yeah, definitely support that one. Any other last comments from anyone or questions from anyone in the audience? No.
While we're waiting
Well,
for David, I'm sorry to interrupt you. I just
yes.
want to highlight this because I know that it's been recorded and we never know where this will end as well. And then there will be VCs who probably will watch this. I know they won't come on the call. It's just to put this out there for them as well. People have got opportunity to have friends with VCs who are part of funds. And I can say this with authority, and I'm just using this avenue as well. Stop getting scared of a market you don't understand, and stop making founders a scapegoat of your own, what I would call your own inferiority as well. A VC will say a market is high risk because it doesn't understand that market. Work with founders who are catalysts of their own market. If there's a founder from Bangladesh, years ago, people were saying Bangladesh is a non-market. It's the VCs in Singapore understand that market. Now Bangladesh is actually blowing up in terms of payment space. Now, a lot of VCs 10 years ago were saying Africa is a high risk market. Now, while the whole startup world was struggling, in the EU, we start seeing unicorns popping up everywhere in South Africa, in Kenya, in Nigeria. So VCs, they probably will be watching this. To me, if VCs are betting on innovators, they have to be innovative themselves. And one character of being an innovator is taking risk and going to a frontier market where no one is there, because we need more solutions in times of making the world the best. I look at Europe and I look at the law of innovations that these drop millions and hundreds of millions of dollars for, and ask myself, how many of these innovations actually changes life, actually affects life? The emerging market is where the problems are, and problems only happen where innovations go. And this is just, I know American investors taking a lot of bets on emerging market, but UK investors are extremely conservative. And this is just me challenging them. They're watching this by any chance to say, get out there and use money as a service, use money as a force for good, invest in female entrepreneurs, invest in Black founders who are a catalyst for their own ecosystem. And in that way, we can create a more fairer society and fairer funding for everyone.
Absolutely brilliant. Thank you very much for that, Michael. And that's a wonderful segue into one of the things that we do at Funding Focus is for everyone who attends our events, we make a contribution through B1G1 to charitable causes. And our charity that we're supporting for everyone who's attending today is based around Youth Day in South Africa. So Youth Day came about from riots in Soweto in the mid-1970s when the Black children were not getting the same quality of education. And it's become a big movement. And in fact, today's a public holiday in South Africa. And so we are making contributions for everyone who's been here today to provide education and skill training to disadvantaged youth in South Africa. So thank you very much for participating today. And this is something that we're very committed to as a company. We make contributions every time people attend our events. We have also committed as a company to donate 5% of our gross revenues through B1G1 to charitable causes that are supporting UN Global Goals 4 and 5. Which are quality education and gender equality. And so through the activities of previous events that we've run, we've provided entrepreneurial skills training to female entrepreneurs in Zimbabwe. We've provided basic skills training for young women in the Philippines who have come from disadvantaged families where they're not getting an equal access to education, for them to go and learn vocational skills. And now we're providing education and skills training to youth in South Africa. So we're building that up into a core part of who and what we are as an organization. With that in mind, I'd love to add by letting you know that we have now submitted our application for Funding Focus, the company, to be registered as a B Corp. And so in case you've not heard of the B Corp, it's all based around the concept of people, planets, and profit. So we've just completed the initial registration process on that. It takes a few months for them to go through and certify us. And then for probably our first year of full trading, will be what's called a B Corp pending, with a view to be getting a full B Corp status by the end of our first full year of trade. So I'd like to just close out by giving you an update, and I touched on this briefly at our last session. We're a smaller group today, so I'll probably do it a little more informally, but we started out 18 months ago. So our first event was in November of 2019 at the London Stock Exchange. We've then ran our second annual event on the anniversary date in November of 2020, where we've tapped in initially to a global audience. We've now run 2 events this year, and we've got another one running this afternoon. But I'm really excited because we've just done this off the back of our own social media, and we haven't really poured any significant resource into this. But we have now tapped into a global audience, and we have over 750 contacts in 27 countries on 6 continents. So I'm delighted that we have people from Australia today, because our previous events, as I said at the beginning, were held when it was in the middle of the night in Australia, so it wasn't really possible. But we've now had people from Australia. So literally the only continent we haven't had anyone attend one of our events from yet is Antarctica. So we'll be working on that one next, but I don't think there are too many entrepreneurs there. Lots of penguins, but so yeah. So what we're doing in addition to these events, and our plan is to continue running these events and scaling them up to get a wider audience. Running these events 4 times a year. One in Q1 in March, the next now in Q2 in June. The third one will be on the 15th of September. And then our annual conference, which will be the longer 4-hour event, will be held again in November. So that's part of the whole raising awareness aspect of our mission at Funding Focus. The other part of our mission is to provide education, and we've launched our first education program, which we completed 2 weeks ago. So we had that pilot group of people coming through a program that we call Funding Focus Explore. It's a 6-week online program delivered live, 2 hours a week over 6 weeks, which is just a sort of an introduction to fundraising. So many people have come to me and said, I don't really understand what it's all about. I don't know who all these players are. I don't know how to prepare. You know, I'm interested in an accelerator, but I'm a little bit, nervous about it. And so we've deliberately designed this as an entry-level introductory program for founders to come to and participate in. If anyone is interested in learning more, just pop yes into the chat, and we'll come back to you and have a separate conversation. I don't like to do selling on these things. I hate all those webinars where you get the hard sale at the end. I do not like that. But if you're interested in learning more about that, please just pop a yes into the chat and we'll be in touch. The other elements in our program that we're still developing, the second program that we're doing is going to be called Funding Focus Exchange. It's a much more in-depth kind of, we do it with you to help take you through the whole process to the point where you're actually ready to pitch. And it will include pitching to some live investors in a safe and secure environment, so you can go through that whole process. And then beyond that, we're looking to launch that program in the autumn. Beyond that, in 2022, we're looking at launching 2 more services. One is going to be called Funding Focus Exclusive, which is all based around one-to-one coaching for you as the entrepreneur. And the final one is Funding Focus Expand, which is based on everything that was in my first book, Add Then Multiply, which I've got here. and you can see on my LinkedIn profile, which is more for more established businesses who are looking to grow and scale using the FACE methodology that I've described in that book, which is fund, acquire, consolidate, and exit. So it's kind of taking my core stuff, but putting that at the back end of the program for the established businesses, because I think based on everything that I've read and the research that I've done, there is still huge demand in the marketplace for people to go through these processes and get access and understand and learn how to seek out and secure investment for their businesses. So that's what we're doing at Funding Focus. We're working on big plans to grow the company next year and over the coming years. And you know, as I said, we've tapped in with very little direct activity and marketing. We've tapped into over 750 people in 27 countries on 6 continents. So there's definitely a market out there. We've now, as I mentioned at the beginning, we've recruited 2 people who've been on here today, Drew and Jacob, who are coming in to help us with our whole marketing and branding and image and all of that. And we're looking at doing more to scale the company. So thank you very much for your support. Thank you for being here. Thank you in particular, Pooja, for being our first person from Australia to come to one of our events. And it's great to see you. Did my book arrive, by the way? It did. Excellent. Fantastic. Wonderful. Okay, well, look, folks, that's the end of the session now. I'm happy to stick around if anybody has any less formal questions that they want to address. But if not, we have reached the end of our session. Thank you very much for your attendance. And I hope to see you on the 15th of September at our next event.
Bye, everyone. Nice to meet you all.